Good evening, everyone. Welcome back to another video, another day, another dollar here at Castle Capital. Gonna be breaking down the E-mini futures. Gonna be looking at the monthly, the day, or the weekly, and get into our daily time frame, and then we'll look at our 30-minute time frame where I will kind of walk you through my technical analysis more or less. As today really hasn't resulted in a whole lot trading wise. Another consolidation, very tight range. As you can see, the market is still open right now. I figured I'd go ahead and hop on the video content while I have the opportunity to before I get too busy here in a little bit. Been feeling kind of under the weather here recently. Got some type of cold or something going. I don't know. Not too hot right now. But so sorry if you hear a scratchy voice or if I have to sneeze in the background. But let's go ahead and get into it. If you guys do not mind, please leave a like down below. Leave a comment of something nice. What'd you do nice today? What'd you do nice for someone else? Anyway, let's get into it. So monthly, we are in a solid monthly balance. Let me bring up the actual monthly chart here. We were looking at the weekly there. We're in a pretty solid monthly balance. I need to rename. I'm just going to rename this because it's a multi-balance. Multi-month balance. Jesus, Chris, speak English properly. And then we have a multi-balance low here. So I'm not even going to name how many months because so far it's just consolidation inside this monthly range. Not a whole lot has changed. We are still about 6 months into consolidation here between the 4208.50 and the 3788.50 level. Just really grinding gears in this area, waiting for more market generated information. This isn't a bad thing for the market in the long term, but sooner rather than later, for somebody who is a trader, a day trader, you'd like to see this market pick a direction and start going in that direction. So hopefully after CPI data comes out tomorrow, and then the PPI on Thursday, we will have the information needed to kind of spark this market in a direction. Right now, we're still having a very tough time, very difficult time getting through this 4150 to 4200 area. Just kind of stuck in the mud here. A lot of resistance overhead. A lot of people, a lot of traders are looking at that area. So market's going to be closing here in the next few seconds. Here we go. And ding, 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 ding. There it is. All right. So monthly, still consolidating. Not a lot has changed there. Weekly, same concept. Same concept for the weekly. We are pushing up in the weekly against that upper portion, right? But having a difficult time getting through that from a weekly standpoint. Now, our weekly is also in a balance. All three of our time frames are in a balance. Our weekly is also in a balance. Not a lot has changed here for us. We're just trading between that 4206.25 to 4062.25 area. This week's range, fairly small, only 26.5 points. Granted, we are only 2 days into the trading day, but these past 2 days have been some of the smallest ranges we've seen in a while. All last year, we were very blessed with range and volume. This year, not so much. Range and volume starting to contract, and we're having to be more patient as traders. As somebody who started their career, just 3 years ago, I'm beginning to see all cycles of this market. And, first I got to see the high rocketing bull market, bounce, just V recovery from 2020 on up. And then, 2021 to 2022, a little bit of a sell-off, choppy action. And then all 2022 was nothing but a bear market. Straight sell, selling to the downside. And right now we are in a sideways consolidation type of market where we're just getting a lot of retraction in volume and rotation happening. So the next cycle most likely to happen, right, you would think would be to the upside or a continuation to the downside. But the way the market's shaping up and the way we've been trying to recover leads me to believe this market wants to attempt to push higher at some point. So far, weekly consolidating, right? Continues to consolidate, and not a lot has changed here. Just chopping in between the 4206.25 area to the 4062. You would like to see us from a weekly standpoint take out that 4206.25 and begin to one time frame up to the upside. Getting above 4206.25 and above 4208, you would then be getting the monthly to break out of balance to the upside as well. But first, you would need the daily to break out of balance. The daily is essentially in the same type of balance area here. You could say it's the exact same as the weekly balance area, right? You could say it's the exact same range, 4206.25 to 4062.25. There's nothing wrong with that. It's an art, not a science. You can, do what you would like. No matter what, at some point in time, this market will all line up. But for me, the little nuances I'd like to see. For me, I have my daily balance right here at 4177.25. That daily balance high there, and then the same balance low. Today's range was 14 and a quarter. Yesterday's range was 20. So this today is the most is the lowest volume of the year, and the smallest range of the year so far. So range and volume continue to contract here prior to the CPI data release tomorrow. So hopefully that comes out and gives us a little bit more of a direction. But for me, like I said, I'd like to see this market take out the 4177.25 area. That would begin the one-time framing up on the daily. From there, we would continue to push up into that 4206 area. We get above that 4206.25 area. The weekly would begin to one-time frame up. From there, you would like to see us continue to push through the 4208 area. Above that, right, you would want to, so these are the steps, right? Push above the 4206.25. Above that, you want to push above the 4208.50, and then the monthly would be one-time framing up. So we would be going from all balance to all one-time framing up. However, if the market does not like what it sees in tomorrow's data, and it's a non-event, we can continue to consolidate or roll over, take out the lows, and begin one-time framing down, filling in the gaps that we have here, because we do have an island reversal gap that is most likely to get filled, in my opinion, but we'll see how that works out in the future here. Maybe a back test at the 50. Right now, we're just kind of chopping between the 20-day moving average and the 50-day moving average. So let's go ahead and get into our 30-minute time frame. Go over what happened today. I took one trade today, one trade only, and I tend to try to stay out of the markets like we had today, but I gotta get accustomed to taking the opportunities that are presented. And there were a few opportunities today, not a lot, but there were a few, and you could have taken them. Yes, today was a very similar shape to yesterday, just very choppy, wide point of control, not a lot happening. Early on, sellers had things in their favor. We opened with a very small gap. That gap got filled, and then initially we opened up, tried to push up, tried to one-time frame up, but that all got wiped away. We did not take out our initial balance until late in the day. Remember, because initial balance is the first two 30-minute time frames of the day, and we did not take that out until late in the evening. And that's actually where I decided to get on the short train, which is later in the evening. So, there were opportunities to buy as this market was really rather rotational. Let me bring up the destination so you guys can see here. So we did take out yesterday's low, and with it being an inside day, you wanted to see us take out the low and get continuation or lack of. And today was very much so the lack of that we speak of, right? We didn't go trend down. There wasn't one time framing down. None of that said that we were going to have a really good push to the downside. So we ended up just chopping back and forth between the lower distribution from that trend day on Friday and then yesterday's range. We did, however, have lower value today. So that blue bracket that you see, we did have lower value compared to yesterday. So sellers had that in their corner. They also got the overnight low. So sellers had that in their corner as well. So on pushes up, I was definitely more comfortable shorting versus taking the long on the downside. Could you have taken longs on the downside? Yes, you very much so could have. And I'll show you that here in just a second. So let's go ahead and get rid of that destination there. We'll take that off. And then let's go in and mark our time frames. It's been a while since you guys have seen me mark my time frames. So let's go ahead and mark them together. We'll mark them A through M, right? Just like a normal profile. If I can get my caps lock to stay. So we got A period and then B. That's the second time frame, right? C period, D period, and then so on and so forth. We're going to continue to label these all the way through until we get to M period, because there are 13 time frames, 13 30-minute bars in the day. So we go through and label each one. That way we have an idea and kind of give it a characteristics, right? Then we have I period is when we took out the initial balance high. So you see how you have B's high and A's low, and then C, D, E, F, G, and an H. We all just traded inside the initial balance, creating a wide point of control that you can see that it's identified by that yellow line there, right? So pretty rotational. You could have been longing against the day's low on pullback. So in C period, you could have taken longs. Let me bring this bad boy up. You could have been taking longs at around 33 and 30 and using 31 out as your out, right? To rotate back up into the 38 handle. So, you know, you're only risking about 2 points to maybe make about 5 points. And days like today's where you can play a little bit bigger, right? Have a little bit more size on than you normally would because the volume and volatility isn't quite there. And you know your stop is a little bit tighter, so your risk isn't as great as it would be on something like a larger trend day where you kind of need to watch your sizing. And that's what I did today. You could have been shorting in C, D, E, right, against the high of day, against the initial balance in B period, because you did have lower value. The sellers did have a gap initially. The sellers did take out the overnight low initially. So with those things being in mind, I was definitely more comfortable shorting on pushes up C, D, and E. However, I did not take that trade because I wanted to see if we did push up, what we got out of it. And you can see here in J period, we pushed up just into that value low area from the previous day. So we didn't even get into the previous day's value area. And had we done that, I might have waited until we got to the 12Y point of control up here and taken the short the first time against that 12Y point of control at 41.50. But instead, we didn't get that, so I waited patiently until K period opened up. Seeing that K, that we didn't go trend in J period, we had a wide point of control down here, right? So keep in mind you had a wide point of control around the 41.38 level, right? So price is being traded up here. You got buyers stepping in up here. Short-term buyers, but they're stepping in up here thinking this market's going to continue to run and create new highs on the day, not knowing that we have lower value. Sellers had things in their favor for a good portion of the day, and value is extremely important. And then we had a wide point of control at the time on the downside. So we traded back and forth through this 41.38 level at 1, 2, 3, 4, 5, 6, 7, 8 time frames. So it was more likely that we would trade down to that 41.38 level and create a wider point of control in K period. Just because J was an outlier and F was an outlier, we definitely could have traded back into it. And that's so I got in on the short side around 41, 42, and 43. I had a pretty decent size on. I had about 80 MES contracts, so the equivalent to 8 minis. I was definitely comfortable with this size because I really wasn't risking a whole lot to the upside here, as I was using J's high as my out. So I was only risking about 1.5 points to the upside, and to come in and take profits at the 38 level. So as we push down lower, I took a few of those contracts off at 41, and then we broke J's low, got the liquidation break because all those longs that were buying up here uh, got stopped out, and we flushed down to the low here. And I wasn't expecting us to get back down to 35 where the open was, but I was expecting us to get back to at least the 38 level, and that's where I had all my bids sitting to get out of those contracts, and I made decent money on the day, especially for a very tight range like we had today. So trying to become more accustomed and being more patient on trading days like this can be very beneficial. So that's one way you could have traded this market, and then you obviously could have traded against the day's low and F and G period to rotate up to that point of control as well. Um, could have taken the short and J period and been more patient and wait for the flush down. And then after that, there really wasn't any trade. You could have taken a trade in L period against K's high. Taken 42, using 43.50 as your out. You could have taken the trade there to rotate back down into 38, or usually in period can at least test the lows once, and you would have gotten paid decently. However, that's not my trade style. I like to trade a little bit closer to the upper end of the range or the extreme to rotate down or up. So let's go ahead and mark the day's destination. That's how I've been trying to trade the days like this, because it is rather difficult to trade a choppy rotational day. And whenever you are in this range here in H period, right, that's no man's land. You don't want to be trading or taking a trade at point of control. You want to be fading the edges or the extremes to come back to point of control, right? Mean reversion type of trade. Does it always work out? No. But when you have low volume days like today, your probability of getting back to that area is good because of the lack of tempo on the day. So we have our wide point of control here at 38.50. So that'll be the first thing I mark real quick. 38.50. We are, I think, 11 wide. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yep, 11 wide there. So another very wide point of control. Almost a perfect point, but not there. So in order for us to have a perfect point of control, you would need to have 13 out of 13 time frames trade through that area. I don't know if you can hear, but my voice is trying to go out on me. And then we have our high of day up here at 41.25. High of day. And then we have our low of day at 31. So there you guys have it, ladies and gentlemen. All the destinations are the exact same as yesterday, except for now we have another wide point of control. So if we open up above 41.38.50, you look to rotate up, trade at 41.45.25. We get above that, you should go trade at 41.50, 12 wide point of control. If we open up below the 11 wide point of control and can't take out the day's low, you'll look to trade back up into 41.38. If we take out the day's low at 41.31, you will test 41.27.25, lowest accepted price at 41.25.75, and then rotate lower to 41.11.50, where our gap starts and fills at 40.98.25. And then all this upside destinations are the same for yesterday. So I hope you all have a wonderful day. Thanks for stopping by. I'll catch you guys in the next one.